Good afternoon, all of you. Welcome to today's lecture session 2, Financial Regulatory Bodies Role and Responsibility. The dual function of regulation and supervision constitute the core of financial oversight mechanism. Regulation refer to the formulation of rules and standards that govern the behavior of the financial institution and market practices. Market participation, supervision, supervision, on the other hand, involve the continuous monitoring and evaluation of the compliances with those rules together. They serve to preserve, preserve the integrity, soundness, and re- resilience of the financial system. These functions are implemented through several inter, interconnect, interrelated activities, including rule making, supervisory compliances, procedure, and systematic inspection and audits. Regulation and supervisions. Rule making. Number one is the rule making. Rule making is the process through which financial regulators establish and enforce rule, regulation, and standard to govern various aspects of the financial industries. Number two, this is the very important supervisory compliances. They super, super, supervise financial institutions including banks, insurance companies, securities, firms, and other entities to ensure compliances with the regulatory requirement. And next one is the inspection and audits. Regulator conduct inspection, audit, and examination to assess the financial health, risk management practices, and compliances of regulated entities. Licensing and registration are fundamental regulatory functions that serve the gateway to formal participation in the financial system. Through these processes, financial regulators establish and enforce minimum standard for entry into the sector, thereby helping to safeguard the soundness of the financial institution and maintain public trust. Next is a very important aspect, investor protection measures. Investor protection measures, these measures transparent disclosure, required timely, accurate information on product and risk to facilitate informed disclosure. Second one is fraud prevention. Investigate and act against deceptive schemes and market manipulation. And last is right safeguarding and implement Ravi's framework protecting investor interest and dispute resolutions. Market surveillance and enforcement. Market surveillance and enforcement. Market surveillance and enforcement represent critical component of the financial regulatory framework aimed to maintain market integrity, protecting investor, and upholding the rules of law in financial transactions in increase, increasingly complex and digitalized financial ecosystem, ensuring compliances with regulation require active oversight mechanism that not only detect misconduct but also provide deter- deterrent against future violence. Market surveillances involve continuous observation and analysis of the trading behavior to identify in irregularity and sign of manipulation. Monitoring, market surveillances and enforcement is first thing. Monitoring is the first line of the defense in maintaining orderly financial market. It involves the continuous and systematic observation of the trading activities across exchange platforms and institutions to detect anomalous anonymously that may dedicate potential misconduct. Regulatory authorities utilize advanced surveillances systems equipped with the algor- algorithm and data analysis to scrutinize. Next one is the investigation. This is the very important thing. We can see the investigation when market surveillance identify a potential breach or which a formal complaint is required from stakeholders, regulators, initiative investigations to determine the nature, scope, and severity severity of the suspected misconduct. Investigation are fact finding mission aim to gathering. And last one we can see, last one is the penalty and sanctions. Enforcement culminate into the impossible impos- position of the penalty on entities or individuals found guilty of violating regulatory provisions. These penalties serve both a corrective and decorrective functions. Deterrative functions, rectifying the subsequences of the misconduct and singling the regulatory authorities' commitment to market disciplines. Penalty and sanction, penalty and sanctioning. Regulator have the authority to impose penalty, sanction, and disciplinary action against violators, financial regulators. And next one is the very important financial stability and systematic risk management. Financial stability and systematic risk management. Financial stability is the fundamental objective of financial regulation under under planning to overall health and sustainability of the economy. A stable financial system is one in which institutions, markets, and infrastructure function effective, effectively and are resilient to shocks. Systematic risk, on the other hand, refer to the potential for the dis- disruption within the financial sector to trigger widespread spared instability or collapse across the border economy. Financial stability and systematic risk management. Number one is the basic, very important thing, risk assessment. Identify vulnerabilities that could affect financial system stability. Risk assessment, the first step is the managing systematic risk is the comprehensive assessment of vulnerability that could threaten financial system stability. Financial regulator routinely conduct surveillances to detect early warning sign of imbalance or systematic fragility. These may include exclusive credit growth, high level of the leverage among financial institutions, liquidity mismatches, extra. The risk mitigation, implement policy and intervention to manage systematic threats. And last one is coordination. Coordination, sorry, second thing is mitigation on potential threat to financial stability are identify regulatory authorities implement a range of macro fraudulent and macro fraudulential policy to mitigate those risks. Key instruments include capital and liquidity buffers, leverage ratio, reserve requirement, and sector specific lending limits. And last one is coordination. Coordination give the interconnected nature of the modern financial system, effective systematic risk management, necessary necessitates strong coordination among domestic regulatory body and international institution at the national level, central bank, security regulators, insurance supervisors, and financial ministries must collaborate to share data. And next is the very important thing, policy development and guidance. Policy development and regulatory guidance represent fundamental pillar of financial governance, ensuring the regulatory system remain responsive and forwarded looking in a dynamic global financial landscape characterized by the rapid innovation, technological disruption, and involving risk structure. It is very important regulatory framework. Number one, first thing is regulatory framework, safe law and regulation that reflect involving market realities. At the core of policy development is the establishment and periodic revision of the regulatory framework that govern financial institution and market conduct. A regulatory framework comprise the legal structure, administrative rules, fraudulent standard, and enforcement mechanism that collectively shape the behavior of financial entities as market involve drive by the factors such as financial globalization, digital finance, climate related risk, and complex financial product. Existing regulation often require recap- recal- re-collaboration to address now uh, vulnerabilities and opportunities. And second thing is guidance. The guidance, in addition to formal rule making, regulator also provide procedural guidance to assist financial institutions in complying with complex regulatory requirement, regulatory guidance document, circulator, FAQ, and best practices, ad, advisi, advi, advi, advisory and advisory service to clarify the intent and application of specific rule, thereby bridge going the gap between regulation and implementation. Such as guidance is the particularly important in area that are technology complexes or subject to frequent challenges such as risk management, protocol, anti-money and laundering, or subject to frequent changes such as risk management, protocol, anti-money, money laundering, product procedure, data provide norms and so and so. Next, third number, the reform proposal. The reform recommended improvement for the enhancing financial system re-license. Financial regulator also play a strategic role in identifying systematic weaknesses and advocating for the structural reform that enhance the regiling and ex- inclusiveness of the financial system based on data analysis, market feedback, and lesson from financial crisis or institutional failure. Regulator develop reform proposal that address both current and uh, inefficiency and future risk. Policy development and guidance is the very important thing. Next one is the challenges in a financial regulation. These challenges faced in the current scenario in India, the challenging in financial regulation. Financial regulation is the over involving field shaped by market dynamic, technological advancement, and changing social need as the financial landscape continues to transform. Regulators face several challenges that test to adaptability, effectiveness, and risk of regulatory framework. These challenges include managing the impact of technological disruption, coordinating regulation across jurisdiction, addressing gap in a customer awareness, and balancing enforcement with the need of market innovation. Each of these challenges present disconnect hurdles but also opportunity for the regulator to improve their approaches and adapt to a rapidly changing global financial environment. The main challenges are number one, technological dis disruption, adopting the fintech and cryptocurrency. Second one is the global coordination, harmonizing cross-border regulation. Number third is customer awareness, bridging gap in a financial literacy. And last one is enforcement, balancing strategy oversight with the market growth. These are the challenges and face the present scenario. And next one is this the last one slide. This lecture learning outcomes. The learning outcomes of this lecture are to gain: number one, understand financial regulator purpose and scopes. And second one is explain how regulation impact financial market. Next one, say recog- recognize transparency, fraud prevention, and investor protection rules. And next one is assess surveillances, enforcement, and risk mitigation effectiveness. And another one is apply regulatory knowledge to real world scenario. And last one is evaluate challenges and enforcement in a financial regulator. Thank you very much. Thank